Welcome back. So are you looking to start the new year off right on the financial foot? Well, you are not alone. A quarter of Americans have included financial planning in their New Year's resolutions, according to a Nielsen study. Our next guest is showing us just how to be financially responsible this year. Joining us right now to weigh in, Ramsey Solutions financial expert and author of Retire Inspired, Chris Hogan is with us. Chris, Happy New Year to you.
Happy New Year, Maria. It's good to be with you.
And the first step to take is to understand your income, you say. Explain.
Well, I want people to really step back and understand exactly how much money they have coming in. It's not so much to go with your salaried amount. You need to know that net amount. What is coming in versus what's going out? What are your obligations? And so if you can really pull back and look at this, it'll help you be a better manager, and it'll help you start to understand where can I cut back and then where do I need to fast forward?
Wondering about, as you advise people on investing this year, obviously stocks have had a great run. They're trading at pretty high multiples to earnings. Does your advice change based on where the market is, or is it here's the long-term plan and stick with it regardless?
Well, I think when it comes to investing, that the long-range plan is definitely the best process to take. I tell people it's a lot like riding a roller coaster. There are going to be some ups and some downs, but as long as your long-term plan is connected and you understand what you're investing in, the expected returns, and also making sure you're sitting down with your investment professional to make tweaks quarterly, you're going to be fine. You just have to look at it and understand it's a process that you need to follow, but you can stick to the process when you know your steps and you know the expected outcome.
Yeah, you really have to understand what you're dealing with. But you know what? I mean, today we're dealing with a different situation. We've got a new tax code in place. And across the country right now, phone calls are going on between people and their accountants, businesses and their accountants. They want to know what's changed and how they can best capitalize on these changes. So is there anything about this tax plan that you want to mention that needs to be included in our thought processes in terms of our money?
Well, Maria, when you start to step back and look at it, whenever you have these big changes and people are more engaged, I think that's a great opportunity for people to start to expand their knowledge and truly start to understand where they are and what needs to be done. I mean, obviously, when you have the limits on what you conduct from interest from mortgages and you have changes based on small business owners, these are all things that people do need to be aware of. They do need to reach out and talk to professionals and start to truly understand, where am I? How does this impact me? And what changes do I need to make based on this new law?
Yeah, but I'm talking about, Dagan, like, you know, people might want to sell assets. You know, you're living in New York City. You're paying 17% city and state and any other taxes on top of, you know, people are saying, I want to move to Florida and not pay the state and city taxes. Really? I mean, I think right now people are having these conversations, and we may very well see an exodus out of these high tax states.
I love the story in the New York Post this morning, of course, is about all these celebrities putting their multi-million-dollar townhouses and apartments on the market to start the new year. No, they've got better financial advisors than anybody. But to Chris's point, if you want to have a wake-up moment for people who spend money on their credit cards, watch interest rates go up this year. You're having a sell-off to start the new year. Bonds are lower in the United States and across Europe. You see interest rates start ticking up, not just what the Federal Reserve is doing, but longer-term interest rates. It becomes more expensive to borrow to buy a house, and that the interest on your credit cards goes up, Chris. And that's when people realize, oh, I can't afford what I spent.
Well, you have to be careful. And now, Dagan, you and I have talked about this before. Anytime you have debt, you have a threat in your life. I want people to be threat-free and debt-free. I want them to understand where they are and what's going on. Like interest rates, when you've paid off your home and you've paid off credit cards, you're not concerned with that. So I want to encourage people, be aware, buy the right kind of house. Don't just buy something that the bank approves you for. Understand how it impacts you, understand the payments you can afford, and only take out a 15-year fixed rate, pay that thing off and own it, and then you don't have to worry about any of these other changes.
Yeah, I completely agree with you. That's responsible lending, and I hope we can get back to that, because the banks have even made it more difficult for people to get loans. The pendulum perhaps has swung too far in the opposite direction since pre-2007, since pre-crisis. But, Chris, what would be your best advice to millennials, not just the baby boomers, but for the millennials going forward right now?
If I could gather up all the millennials, I would tell them they have an incredible opportunity. They've got time on their side. And so just walking through and understanding how money works, I'd give them all a copy of my book, Retire Inspired, and said, sit down and read this thing. And plug into your 401k and don't pull it out. It's not an emergency fund. It's not a vacation fund. This is your dream fund. If you start early and leave it alone, you will be a millionaire eventually.
Yeah, exactly. We talk about that all the time. We're all fans of 401ks. Chris, thank you.